now is listen to some important market comments. The RBI maintained a status quo in its monetary policy, leaving the repo rate unchanged. But from the sidelines of the Edelweiss India conference, Nimesh, our colleague, caught up with Ludovic Vauthier, the portfolio manager at Edmond de Rothschild Asset Management, and began by asking him what he made of the budget and also the RBI's latest move. Listen in.
I think the problem of RBI, I'm always thinking that RBI is the main social peacekeeper of this country. So, of course, it's very cautious about inflation. It's very difficult to predict, of course, because we've got a lot of external factors which can affect inflation. So the RBI stance is not very surprising for me. Would it change really the outlook of India? I don't think so, because I don't believe in a significant interest rate hike if it comes. I think the story is more about asset quality improvement rather than rate hikes. So I'm not so much concerned about that.
Okay, but does it in any way change your stance on the financials? Because I understand from your fact sheet that you've recently, cut down your exposures into consumer stocks and have moved to, the private banks, the financials. Does it change the view at all?
No, I don't think so, because again, for me, the main point is asset quality improvement. Anyway, loan growth is very low. Corporate India is deleveraging, so we don't have a lot of loan growth. But there is a fantastic demand from the retail side. And I don't think it will be challenged because historically interest rates still remain high in the Indian context. So I'm not concerned about that.
Okay. The one thing which strikes out is the fact that you've reduced your exposure into consumer stocks where you've made a lot of money, as you were saying earlier. Any specific reasons for, is it a valuation concern, or generally you feel those sectors are going to be seeing a subdued earnings?
Well, I have some small concern about the staples company, it's true. First of all, as you mentioned, valuations are not very cheap. And EPS growth prospects are probably lower because we've got inflation input price. So we have to be cautious in terms of margins, probably also extra effort in advertising. So I would be slightly more cautious on staples. But discretionary remains for me very, very strong and a structural story.
Okay. I was looking at our India portfolio, and in the top 5 holdings largely comprises of the India stories per se. It's Maruti, it's HDFC Bank, Aisha Motor to some extent you own in the top 5. So is that something that you're going to play into India, the domestic stories, and avoid the so-called exposed to the global world, the likes of IT and pharma?
I'm more in favor of actually, yes, focusing on more domestic story.
Sure.
The reason is quite simple. There is rising noise about higher protectionist measure globally. Global trade is low and should remain low. And you've got a very good, domestic story, especially on the discretionary consumption. So if I can keep it simple, I prefer like this.
Okay. You briefly touched upon this whole big debate of protectionism, which is probably getting seen across US, across Europe as well. How tough that is going to be for Indian pharma and IT companies, because they are the ones who are large exporters and they could be impacted to some extent. You have TCS in a top holding, while I understand you've reduced a little bit, but broadly from that point of view, how much you think it can dent the Indian pharma and IT companies?
Well, for pharmaceutical company, I think more than protectionism, there is an issue with regulation, especially on generics.
Correct.
I think the US regulator, even before the election, is quite severe if you don't bring significant innovation. So you have to be cautious on that. On the IT company, I don't think the business will disappear like this. There will be perhaps some noise about visa issue, rising costs for making business abroad, but I don't think it's really changing fully the dynamics. But obviously the growth will be lower, so it's more an opportunity issue rather than a structural issue from my point of view.
Right. I understand for investors like you, India has always been a bottom-up stock pickers market. You spoke about some sectors and some of your overweight stances. Where are you seeing value now? Which are the sectors or pockets you think there is a lot of value left for investors like you?
Well, for me, you have to be cautious because I think it's better to approach India in, I would say, comparing valuation with a growth prospect.
Okay.
So where I still continue to see value is in discretionary consumption, and more in industrials, because or capital good equipment, but more for personal, or I would say more for the retail market, where I start to see some value. It's an indirect play also for on property, on the property market, and with lower risk in terms of capital, because it's a less capital intensive business. So this kind of capital good business that I like. Also some opportunity in the defense industry, obviously.
Okay. There are not many plays in defense, right? There are only few stocks to play.
No, I cannot speak about stocks, but not so many opportunity. But unfortunately, I would say probably very good prospect for them.
Okay. What makes you a little bullish on the industrials? Because most of the experts in India do believe that the private capex is going to take another 12 to 24 months. It's not going to come so soon. And even the governments have got constraints in terms of pushing capex to a larger extent. In that context, what makes you believe that the industrials will do well in India?
Well, I fully agree. I mean, after speaking to different banks over the last 2 days, I understand that the capex recovery will not come before minimum 18, if it's not 24 months. But what makes me more constructive is, again, on, I would say, the capital good, which are more electrical appliance or equipment, basic equipment like this for housing, makes me quite comfortable, because I think the genuine demand is there. Despite the demonetization, actually, this company published better than expected results.
Sure.
So when things are normalizing, we can expect even better growth. So I'm optimistic.
Correct. So I was to ask you the next question, which was basically on the earnings. Given that there's so much of concerns about this quarter earnings, it's actually turned out to be better than what the street was expecting. What have you made of the earnings that you, especially in the companies that you own? And do you think the demand effect is going to be only temporary, and probably you'll see a uptick in the earnings as well? Because I understand for Indian markets, returns have largely been correlated to what kind of earnings the growth has been. So in that context, where do you see earnings growing in the next 1.5 to 2 years?
I think we could be again reasonably optimistic. First of all, the base effect is very low. Over the last 2 years, we don't have a lot of growth, so this is just an arithmetic argument. But if you look at demonetization in this such a tough environment, and what the company were able to publish,